What credit score is needed to buy a house? Welcome back to my channel, and if you're new here, don't forget to hit the subscribe button and ring the bell so you don't miss out on any future content. We release weekly doses of real estate wisdom, so I think you'll like it. Today we're going to talk about credit scores and how they impact your ability to buy a house. So let's just go ahead and break it down. First, let's talk about the minimum credit scores needed for different types of loans. For a conventional loan, you typically need a minimum credit score of a 620. FHA loans are more forgiving and they require a minimum score of a 580. Though some lenders might go down to 500 with a higher down payment, USDA loans usually require a minimum score of 640. While VA loans don't have a set minimum, but generally require a score of a 620 or more. Your credit score directly impacts the interest rates you'll be offered, so a higher credit score means lower interest rates, which saves you money over the life of your loan, which amounts to thousands and thousands of dollars. For example, someone with a score of 760 might get an interest rate of 2.5%, while someone with a score of 620 might get a 3.5% rate. This difference can add up to thousands of dollars over the years. So how do you check your credit score? You can obtain a free credit report annually from each of the three major credit bureaus, which is Equifax, Experian, and TransUnion. There are websites like annualcreditreport.com. They offer these reports for free, and additionally, many credit card companies now offer free credit score monitoring as part of their services. Now, if your credit score could use a boost, there are several steps that you can take. First, make all your payments on time, as payment history is a significant factor in your score. And second, reduce your outstanding debt, aiming for a credit utilization ratio of 30% or less. Third, avoid opening new credit accounts unless necessary. So each inquiry can temporarily lower your score, which you want to avoid. And finally, check your credit report for errors and dispute any inaccuracies you can find, and that can take some time to do that. And remember that different lenders may have different credit score requirements. So some might be more lenient, especially if you have a high down payment or other strong financials. It's essential to shop around and get pre-approved by multiple different lenders to see what your options are. And improving your credit score does take time, but it's worth it. And depending on what your situation is, you might see significant improvements in just a few months by making consistent on-time payments and reducing your debt. For larger, more systematic changes, it might take a year or more, but patience and diligence are key here. And if you have a lower credit score, getting pre-approved can be more challenging, but it's not impossible. Lenders will look at your overall financial picture, including what your income is, your existing debts, and what your employment history has been. You might need a larger down payment or consider an FHA or subprime lender that specializes in helping those with lower credit scores. So basically, there you have it in a nutshell, everything that you need to know about credit scores and buying a house. And if you found this video helpful, please like, share, and subscribe for more insider real estate tips. And I'll see you on the next video.